Hi, this is Peter Schiff, and this is another live edition of the Schiff Gold Friday Gold Market Wrap. And it was a very volatile week in precious metals, though we ended the week not too far from where we began. Gold managed to finish on the north side of 5,000, up about $70 or so. We settled just above 5,030. Gold almost hit 5,100 on Wednesday before a violent Thursday sell-off sent gold plunging slightly below, I believe, 4,900. Silver went on a much more wild ride. In fact, on Wednesday, silver topped 86, and by Thursday, it was below 75. That was an $11 drop, and almost the whole thing happened in about 5 or 10 minutes. Just out of nowhere, there was a big sell-off in pretty much everything, but it was led by gold and silver. And then we got a sell-off in the stock market, sell-off in crypto, but it seemed to begin in gold and silver. But we had a big rebound today. Gold, which was down about $160 yesterday, rallied better than 110 today. Silver didn't come anywhere near recovering the losses from yesterday. It was up almost $2 on the day, back above $77, but still down a bit on the week. $1 or $2, not much. The gold and silver mining stocks, after getting clobbered Thursday, I think the GDXJ were down around 9%. They still managed to finish the week with decent gains. And if you recall my last gold market wrap, my prediction is that the gold and silver mining stocks are going to hit new highs before gold or silver hit new highs. And I still think that's going to be an accurate forecast. You know, the media is paying a lot more attention to the sell-off than the rally that preceded it. I hear a lot of talk now about the silver bubble, the bubble that's popped. They're focusing on the drop from 120 down to the low 70s. But they're missing the bigger picture. The rally, not only the rally from 30 to above 70, but the fact that we took out this massive resistance going back to 1980. This is very significant. The noise is just something that you might expect following a breakout of this magnitude. But I love all the talk about a silver bubble. The media is trying to keep people from buying gold and silver, trying to convince the people who own it to sell it. What are they hyping up? They're still hyping up Bitcoin, even though that is a bubble. And that bubble has probably already popped with a 50% decline in Bitcoin. But there's a lot of air that's still left to come out, yet the mainstream media is still trying to con everybody into buying this dip. Meanwhile, Bitcoin was down on the week. It did not rally, despite a big rally today. Bitcoin finished a week lower. In fact, as I'm recording this, we're below 69,000, 68,800. Remember, MicroStrategy or Strategy's cost basis is better than 76,000. So even Strategy, the poster boy of Bitcoin investors, is losing money after 5 years of buying nothing but Bitcoin when it could have done anything else. So the media is still trying to get people into crypto and keeping people out of precious metals and the mining stocks. So that's great, right? That's music to my ears. That makes it easier for my clients and my customers to buy more at lower prices, which, again, I will begin this wrap by encouraging everybody, don't wait for Monday. Buy gold and silver over the weekend. Now, gold at 5,030, to me, there's minimal risk. I don't think gold goes much below 5,000. In fact, every time it's gone below 5,000, it's quickly got back above it. Gold, to me, is acting now around 5,000 the way it acted around 4,000, the way it acted around 3,000. It just builds a new base and then makes new highs. The good thing about buying gold now at 5,000 is that we were above 5,500. So you have a 10% correction from the highs. That's a great entry point. And I think you're buying near the floor. So if you want to buy a precious metal where you're probably not going to be down much at all. If we get a sell-off, you buy gold right here. Obviously, when you have silver swinging $10 in 10 minutes, right? I mean, there's a lot more volatility. I think the support in silver, though, is around 70, the low 70s, not even 70 even. And so if you buy it now at 77, maybe you got 10%-ish downside risk realistically. Not that bad. Plus, I think the spreads on silver coins and bars are going to keep widening. So I think the sooner that you can get in, I think 77 is still not bad. When it was down at 74 last night, I was on X saying, hey, buy it right now, 74. Seemed like a pretty sweet deal. And what I have noticed, by the way, when it comes to silver, is the prices that you'll see on the Schiff Gold website are several dollars lower than most of our legitimate competitors, right? I'm not talking about the companies that rip everybody off, but the other legitimate companies that have decent prices, fair prices. Our silver bars and coins are a lot lower now compared to them than they used to be. And I think what's happening is our competitors are, using the volatility to really increase their prices. We haven't done that. I mean, the prices are a little higher only because our wholesale prices are a little higher, but we're keeping our markups about the same. So you really save quite a bit of money right now if you buy some silver in particular from Schiff Gold rather than from some of our competitors. So I would encourage that. I do expect another big rally in Asia. It seems like that's where the buying comes from. The big sell-offs mostly happen during U.S. trading hours, right? Not during the Chinese hours. I mean, once in a while, yeah, but mostly it's happening in our time frame and generally middle of the week, right? Wednesday, Thursday, Monday, Tuesday, typically up. So I think you buy, again, if you want to buy a metal and not have to worry that it's going down, just buy gold. If you buy some silver and you're worried it may drop $5 or $6 10 minutes after you buy it, or who knows, then, you can buy more. Average in, and if you're worried about the market going down. But I think the key is to load up, but in particular, too, on these mining stocks. We had great earnings that came out of Agnico Eagle earlier today. Stock was up, 5% or so on the day, but didn't make a new high. I think it would have had we not had the big drop yesterday, but maybe next week we'll see new highs as we get more earnings that are way ahead of estimates. But remember, these stocks are still cheaper now than they were before they tripled because of the impact on their profits from the rise in the price. But remember, Wall Street never believed the rally. The whole rally from 2,000 to over 4,000, even 5,000, happened while Wall Street was skeptical. If you remember, there were major downward revisions. Wall Street firms put sells on Newmont and Barrick when gold was at 2,000 because they said there was no more upside in gold. So why own the miners? Well, there was tons of upside in gold. They just didn't understand that, and they still don't understand that. They still think the prices are going to come down. Not only are they not going to go down, they are going to keep going up. And so none of this is really priced in to these stocks, and all of that is going to happen. Meanwhile, instead of focusing on what's happening in gold and silver, all the media seems to care about is that the Dow hit 50,000. Now, it didn't close the week at 50,000. We actually closed at 49,500, but we have been above 50,000. And the media is making a big deal about 50,000 in the Dow. The Trump administration, not just Donald Trump, but everybody's got, their script now. And when you ask them any question that they can't answer, they just say, well, the Dow Jones is at 50,000. That's now their pat answer to any economic question. Well, everything is great because the Dow is at 50,000. Well, first of all, so what? Right? I mean, it's no big deal. Gold is at 5,000. The Dow is worth less than 10 ounces of gold because the Dow is under 50,000 and gold is above 5,000. So the Dow is worth less than 10 ounces of gold. When Donald Trump was sworn in, the Dow was worth more than 16 ounces of gold. So he's bragging about the Dow going up. It was at 44,000 when he was inaugurated. So, it's been over a year, 6,000 points on the Dow. I mean, that's nothing exciting. It's not like we haven't done that before. So he's making a big deal about that. But priced in gold, the U.S. stock market is down about 40% since Trump was elected. That's a disaster. That's one of the worst showings ever. I haven't done the research, but it's very unlikely that we've ever had a president where in the first year that he was president, the Dow dropped 40% priced in gold, right? Maybe it happened in the 70s or stuff. I haven't done my research. But it is a big decline. I saw Donald Trump. He was interviewed by his buddy Larry Kudlow, and he was talking about Dow 50,000. And he said to Kudlow, and again, I'm not making this up. Go on the internet and look at the Kudlow interview. Just make sure you look at the most recent one because he's been interviewed by Kudlow before. This one was just, on like a couple days ago. And he goes, well, we've already hit 50,000. I've only been president for 1 year. And, when I got elected, people were telling me if the Dow can get to 50,000 by the end of your term, it'll be a miracle. And he goes, and you know what? We performed the miracle. We're already there, and it's only 1 year. A miracle? The Dow was at 44,000 when he took office. How is that a miracle? 6,000 points in 4 years would have been a miracle. Is Trump, he just makes this stuff up. Who knows what anybody told him? Does he even realize where the Dow was when he got elected? Plus, also, who cares? The Dow hit 40,000 for the first time when Biden was president, right? So does that mean we had a great economy under Biden? Not according to Trump. Trump says we had the worst economy in the history of the country when Biden was president. Yet we set one record high after another in the stock market. So what is it? If the stock market is a bellwether of the economy, like he's claiming now, if a 50,000 Dow means we have a great economy, well, why didn't a 40,000 Dow mean we had a great economy when Biden was president, right? It's the same thing. The stock market has been going up no matter who's the president. But in reality, it's been going down because in 1999, the Dow was worth over 42 ounces of gold. Now it's worth less than 10. It's down over 75%. It's been going down in real terms, regardless of which party had the White House. It's been going up in nominal terms, regardless of which party controlled the White House. So why is this 50,000 Dow significant at all? Especially when Donald Trump ran the first time, he pointed this out. He said, it's meaningless. It's not about the Dow. It's about Main Street, not Wall Street. In fact, he still says that. And every member of his administration, when I hear them interviewed, Ludnick or Bassett, they say, we're about Main Street. We're about Main Street finally, getting its share, right, piece of the pie. We're about workers earning more money and getting better. Okay, well, if it's really about Main Street, why does he keep talking about Wall Street? Why are they fixated on 50,000 Dow? If that's not their goal, if their goal is to help Main Street, they should be worried about the problems on Main Street because there are a lot of people on Main Street that don't own the Dow, right? They have a lot bigger problems. But no, I think the only reason that the president is hanging his hat on the Dow is because that's really all he's got. The economy is weak. I went over the jobs numbers already on my regular podcast on Wednesday. So I'm not going to go over it again. Make sure and go watch that video or listen to that. I went over not just the number that we just got, but the significant revisions that we got to prior years, because those were far more important than the meaningless numbers that we just got, which of course are going to be revised down multiple times over the next several years. But we have a weak labor market. The only thing that's strong is inflation. Now, we got inflation data out today that I'm going to talk about because the media spin and the Trump administration spin is that this is good news, that the CPI that we got today is good news. Why is it good news? It's good news because it's better than estimates. Well, who cares? The estimates were, way above 2%, and we came in way above 2%. So the consensus estimate for January CPI, and again, remember, the CPI dramatically understates what's going on with prices anyway, so it's irrelevant in reality. But the estimate was 0.3% increase, and we got 0.2%. That was the beat. This is what everybody is excited about, that prices only rose 0.2% in January. Well, if you annualize that, that's 2.4. I mean, that's 20%, 40% above 2%, or 20%, right, above 2%. It's not, how is that good news when the Fed's target is 2%? Year over year, we're at 2.4%. Now, that's a little bit better than the 2.7% year over year we had in the previous month, but it's still well above the 2% target. But here's where it gets worse. The core, which is supposedly more important than the headline number, the core was up 0.3. Yes, that's what they expected, but that was 50% higher than the 0.2 in the rearview mirror from December. But if you annualize 0.3, that's a big increase. That's 3.7% annualized. That's better than the trailing year over year of 2.5. But that shows that we're going in the wrong direction. 0.3 is a big number, and it's probably going to get bigger. But, even at a 2.4% year over year CPI, 2.5% core, we are as much above 2% or further above 2% than we were below it for most of the years where the Fed had interest rates at zero and was doing quantitative easing. So it was such an emergency when inflation was 1.6, 1.7, because we weren't 2. It was such an emergency that we didn't have enough inflation, that the cost of living wasn't increasing fast enough for the Fed, that they had to put the pedal to the metal. They had zero rates. We had all this QE to try to get inflation from 1.7, 1.8 up to 2. But now that we're 2.5, we don't have any of that kind of aggressive policy. In fact, they're cutting rates. The odds of rate cuts are going up right now. And, we're not doing quantitative tightening. We stopped that. So we're nowhere near as aggressive when we're above 2% and we have too much inflation as we were when we supposedly didn't have enough inflation. And again, all this talk about Kevin Warsh being some kind of hawk who's going to swoop down on the Fed and start jacking up rates, this is all nonsense. They're all laying the foundation so that when he starts cutting rates like a madman, Trump could say, well, this is not my doing. This is his own judgment. Remember, this guy's a hawk. He's a tough guy on inflation. And if he's cutting rates, well, it must really be economically justified. It's got nothing to do with politics. Of course, it's got everything to do with politics. So I don't think the world really is going to get fooled by this nonsense that we've got, tight money coming or a hawk. It's pretty clear the game that they're playing, and I think more people are going to recognize this. So this was not good news on inflation. I don't care how the media is choosing to spin this. Inflation is still high, and it's going higher. I mean, look at oil, for example. I mean, oil has clearly bottomed, and you can see that not just in oil trading, and it's about $63 a barrel right now. Remember, the low is about 55, so we're way off the lows. But look at the oil stocks. I mean, they pulled back last couple days, but during the week they all hit 52-week highs. Oil stocks were, among the strongest stocks out there. So I think oil investors are anticipating higher oil prices. Meanwhile, other commodity prices are rising across the board. We're seeing the big increase in producer prices that are going to bleed into consumer prices. And of course, we got the tariffs, right? Now, as much as the Trump administration wants to pretend that we're not paying these tariffs and that these tariffs are making us rich, the reality is the opposite. In fact, the Federal Reserve Bank in New York just did a study on the tariffs to find out who's paying them, right? And their study concluded that 90% of the Trump tariffs are paid for by Americans, American consumers, American businesses. And maybe 10% are being absorbed by producers. Now, you didn't need a study for that. I mean, this is basic economics. I mean, it's almost not even economics. It's so simple. It's like common sense that the taxes are paid by the consumer. And of course, the longer the tariffs remain in effect, the more of the burden will get passed on to the consumer, right? So ultimately, 100%, even if the consumer is not paying 100% of it yet, if some of it is being absorbed by the U.S. companies and some is being absorbed by foreign manufacturers, ultimately it's all going to land on the consumer. Because there is some initial reluctance sometimes to increase your prices. You're trying to maintain your competitive position, and you're really not sure what's going to happen. Companies are reluctant to raise prices. I mean, Elizabeth Warren and Bernie Sanders think that companies are just really trying to gouge their customers as much as they can. They're not. They're actually trying to lower their prices. That's what businesses always try to do. How can I lower my prices? How can I reduce my costs so I can give the customer a better deal? Why do they want to do that? So they get more customers. They sell more products if they can sell them at lower prices. That's the beauty of capitalism. You have all these businesses, all these business owners trying to figure out how they can lower your costs, how they can get lower prices. They stay up late at night, trying to figure out, what can I do? How can I squeeze some costs out of my business so I can lower prices, right? You don't have that in any other economic system. You don't have that in socialism or a centrally planned economy, but that is the beauty of capitalism. Now, again, why is the entrepreneur, why is the business owner, so keen on lowering prices? Because he really cares about the well-being of his customers? I mean, it probably does, but the primary motivation is to make the most money for himself. The businessman knows, if I can find ways to lower my costs, I can get more of the market. I can beat my competitors who haven't figured out how to lower costs as effectively as I can. So the tariffs, even though 90% of them are being paid by the Americans now, more of that 90%, in fact, the 100%, are going to end up being paid by the end consumer, right? But what people should really be concerned about, the Trump administration, if they actually think, and these are these top economic advisors, right? The chairman of the President's Council of Economic Advisors, his top economists are all saying that we don't pay these tariffs, that the tariffs are just magically paid by foreigners, and we're getting rich off of tariffs. According to Trump, we're getting rich off these tariffs. Well, how are we getting rich if we're paying our own tariffs? How are we getting rich paying taxes to ourselves, right? Transferring money from our pockets to the government pocket isn't going to make us rich. But if the Trump administration and all their economists can't figure out something so simple is how tariffs work. I mean, what about the more complicated economic stuff? I mean, they don't have a clue or a chance there. I mean, our government is being run by a bunch of economic ignoramuses. Either that or they're just lying. Maybe Trump doesn't get it, but his advisors are too afraid to tell him that he's got it wrong. So they just lie, right? Just to kiss up to him. They're afraid of, if they say something, maybe they're going to get audited, or I don't know what's going to happen. They're going to try to find a way to trump up some charges. But everybody is is staying in line and just rubber stamping whatever harebrained idea that the president wants to advance. But, also going back to this idea that the bellwether is the stock market, right? Because Donald Trump also is claiming that trillions of dollars are just pouring into the country, right? All these companies, everybody wants to invest in America because, they want to get around the tariffs and they want the protection that the tariffs provide. None of that is happening. This is all just a fantasy in the president's mind. The dollar is down on the year. Down. The dollar hit a record low against the Swiss franc. If money was pouring into the U.S., the dollar would be going up. Because if you're a European and you want to invest in the U.S., you got to convert your euros into dollars to make U.S. investments. There should be demand for our currency if all this money is coming in. It's not. Meanwhile, yes, the Dow is up 50,000, but the U.S. stock market is about the worst performing stock market in the world since Trump's been president. Now, obviously, I haven't looked at every single foreign market, so there could be some, and there probably are, that the U.S. beat. But the vast majority of stocks, look, my foreign dividend payers fund, which just invests in a portfolio of dividend-paying foreign stocks, was up 62% last year. That was like triple the S&P. It's up better than 13% this year. The S&P is up like 1%. And, all of the foreign stocks are outperforming. So if all this money is going into the U.S., why is our market the worst performing market? Obviously, money is leaving. Investors are pulling money out of the U.S. to invest in their own countries instead. The opposite of what Donald Trump is claiming. Because these tariffs don't make us more competitive. They make us less competitive. Why do you think manufacturing is still in a recession? The tariffs are not changing that. Because a lot of companies import a lot of stuff that's now a lot more expensive because of the tariffs. The only relief we're going to have is as the tariffs go away. The only good thing that Trump can do to help the economy is remove some of the tariffs. And then, of course, he'll try to claim credit for that, right? It's like, I've said Trump is punching us, and then he stops punching us, and now we have some relief. You say, see, look at what I've done for you, right? You feel a lot better now that I'm not punching you anymore. But the problem is that he was punching us in the first place. And if you stop, you can't really claim credit when you are the source of the problem. But I think as we get closer to the midterms, there may be some added pressure to remove some of these tariffs so that the public doesn't have to pay them. But, there's going to be a lag because a lot of the stuff that's tariffed, once it's brought in with the tariff, even if you lower the tariffs going forward, they've still been paid by the importer. They still have to be passed on to the customer. So it may be too little too late to try to provide some relief by removing the tariffs. And of course, Trump is going to try to send out these tariff dividend checks as if, we've got so much money pouring in from tariffs that we can pay dividends. Now, yes, the tariffs are offsetting some of the bigger deficits that were created by the big, beautiful bill, but not enough. We had these big tax cuts, no tax on tips, no tax on overtime, no tax on Social Security, right? Keep hearing that. Increases in government spending, entitlements kept going up, welfare, military spending going up. So the deficits went up. They can't really blame the inflation on Biden and his deficit spending. Sure, that's part of the problem. But when they make it worse, when they have an opportunity to cut back some of the Biden-era spending, but they don't do that, in fact, they preserve all that spending and then add to it, how do you blame Biden when you're doing the same thing? You're doing it even worse. It's a convenient scapegoat, but it's not going to work very well in the midterm elections. I said before, and I'll say it again, you don't win elections by lying to the voters about how great the economy is. and promising more. Because when the economy is bad and the voters know it, that's the last thing they want to hear. It's much better to be honest with the voters about how the economy stinks and then lie to them about how you're going to make it better. That's how every election has been won the last three. The party that's not in power wins. Why? Because the party that's in power has to claim the economy is good, and they look like fools to the voters. The party that's out of power gets to acknowledge how bad everything is, blame it on the party that's in power, and claim that they're going to fix it. And, that's a winning message. That's better than everything is great, so, you're wrong. So, get used to it, deal with it. No, the voters want to be told, I feel your pain. Yes, the economy is bad. And it's the current party's fault that it's bad. They're trying to get you to believe that a bad economy is good. Don't believe them. I concur. Feel your pain. And we have the policies. We're going to make the economy better. So at least there you're holding out hope. If the incumbent party is promising more of the same and you don't like the same because the same is bad, then you're going to vote for change. You're going to vote for the party that's promising to make things different, because you need things to be different because you don't want them to remain the same. And when they get worse, then now the other party has the same script, right? It's like, a baton. It goes back and forth. We keep going one term, one party, one term, one term. That's why I think the Republicans lose the midterms. Losing the House is a foregone conclusion, but I think they lose the Senate too. And then they lose the White House, which puts us in a very bad position in 2029, because we could have a clean sweep. We could have a Democratic president with a Democratic Congress, and that's going to do even more damage than a Republican president with a Republican Congress. We may be on pause for a couple of years when we have split government. When we have a Republican president and a Democratic Congress, it makes it harder for them to do damage. They still find a way to do it, but it's a little bit harder. Like, we may actually find that some of the Republicans in Congress, all of a sudden, they care about the deficits when the Democrats control it, right? They never care about it when they control it. But given that, Trump is going to be president, they don't care about anything that Trump doesn't care about. And he doesn't really care about the deficits. All Trump really cares about is blowing more air in the bubble. He just wants to make sure that when everything collapses, he ain't the president anymore. He wants to be able to say it was great while he was president, and if it falls apart, well, that's the next guy's fault, right? That's whoever follows him. I had the greatest economy in the history of the world. How did you screw that up, right? That's what he wants. And that's why he's got his handpicked guy, Kevin Walsh, to take over the Fed. And, there's a lot of people speculating, is Powell going to stick around and kind of be a thorn in his side? My guess would be no. The precedent, historically, although apparently before I was born, I forget the guy's name, but there was a Fed chair whose term expired and who stayed on the FOMC. But normally, when you've been the head and now there's a new chair, the old chair steps aside just to give the new guy, a clean slate. Because you don't want to have a current chair and a former chair at the same time, because kind of like, well, who's right? You're supposed to have a leader. And if you have the old chair there kind of, trying to lead in a different direction or having a different opinion. So normally they basically allow the new guy to be the head. And if you were the previous Fed chair, you kind of leave the entire board. And another reason they do that is they get on the speaking circuit and they make a lot of money. These guys make $250,000 to read from a teleprompter for 30 minutes. It's a great gig. And usually you get paid the most when you're the immediately prior Fed chair. So the most money-making opportunities that Powell is going to have is in the first couple of years that he's no longer the Fed chair. Everybody wants him to speak, right? And he's going to make a ton of money. And so this, this is the opportunity for Powell to make a lot of money. And so I would imagine that that's exactly what he's going to do. Plus, once you leave, if anything bad happens, it's like, hey, that's not my fault. I wasn't there. Get out of Dodge. I would give that advice to just about anybody. This thing is going to blow. And, you want to have some distance between yourself and the explosion, right? So I think it'll be in Powell's interest to get the hell out while he can, and let Walsh and everybody else who's still on the FOMC, let them deal with the mess that he helped make. But he had a lot of help with prior Fed chair. But anyway, I'm just going to wrap up this market wrap. Again, just remind everybody, buy some gold and silver, tune out the noise. In fact, turn out your screens if you're nervous about the markets going down, especially if you're a gold stock investor. That's probably one of the best things you could do is don't watch this. You don't want to get scared out of your positions. I think one of the big mistakes that people are making and are going to make is selling out too soon, believing that a triple is good. That, okay, this is a mania, this is a peak, it's time to sell. I think we've barely just begun. You have to keep everything in perspective and look at where we've tripled from, and look at where we are. I think a real gold rush is coming. I think the world is remonetizing gold. Central banks are divesting of dollars and are building gold reserves. Investors are discovering for the first time in the private sector that they should have gold in their portfolios. You have, pensions and endowments and mutual funds that have no exposure to gold, have no exposure to gold mining stocks. That's going to change over the next several years. It's going to be something that you're going to expect. Remember, all of these managers, they're afraid to go out on a limb, and they're following their herd. They're not a leader, because it's not in their best interest to go out on a limb and potentially fall, right? If it's not considered normal to have an allocation to gold or silver, and you go out on a limb and you buy some gold stocks and they go down and nobody else did it, you look like a fool and maybe you get fired. Why did you do that stupid thing? What are you, nuts? You're out of here, right? But once a few people finally have gold and silver, and now more people have some courage now, okay, I'm not the only one, and they include gold and silver. Now, if it goes down, they don't look so bad, because look, I'm not the only one who did this. It was prudent. Other people were doing it, and I did it too. And okay, so we were wrong, but we were all wrong. It wasn't just me. The next thing that happens is it becomes normal to have gold and silver exposure. And if you don't, and gold and silver keep going up, and you don't have those stocks or that allocation, now you look bad for not doing that. How could you not have gold and silver? Don't you see? Everybody else is buying it. You're fired. We need a new guy. You don't know what you're doing. So people go from being afraid to buy gold and silver and mining stocks to being afraid not to buy it. So that's what is going to happen. And final last words, again, and I've said this before, even if you've got all the gold and silver that you need, and you've got all the mining stocks that you need, you got to make sure that your friends and your relatives are also positioned in gold and mining stocks. Because you don't want to be the only one in your family or the only one in your group who doesn't go broke. It's going to be lonely, right? And it's going to be expensive. And everybody's going to be hitting you up, right? Your friends, your close relatives are going to know that you got a bunch of gold and silver. They're going to be hitting you up for loans. Do you want to have to tell everybody, I can't loan you any money, or are you going to loan everybody money? And will you even get paid back? So if you want to avoid that, get them into gold and silver now. And then at least when they call you up to borrow money because they're broke, because inflation has wiped them out, if you don't want to do it, you can say, look, I told you to buy gold and silver. Why didn't you do that? Right? Then you wouldn't be hitting me up for money. So send them to Schiff Gold, get them in, have them go to Euro Pacific Asset Management. And also, if you got some close friends and you like to go on vacations with them, you like to go out to dinner, you don't want to have to pick up every check because you're the only one with money, right? You're going to have a much better social life if the people that you socialize with also have money. So you can all afford to do stuff together instead of everything falling on you. So it's in your own best interest to make sure that everybody you care about, everybody that you socialize with, everybody who could possibly hit you up for a loan, make sure that they are invested, that they have gold and silver, that they have these mining stocks. Get out of overpriced U.S. stocks, get out of dollars, get into the right portfolio. I don't know how much time they have to do it, but they still have time, and you're the one that could do it. So lead them to water, and if they don't drink it, it's on them. Anyway, bye for now. Have a great weekend, everybody. I'll be back next week with another Schiff Gold Friday market wrap. Oh, and happy Valentine's Day. Almost forgot that. I don't know if that's still in, but Valentine's Day is tomorrow. So